All right, good evening, guys. Kenneth Tortoise Capital Nightly Strategy Podcast for December 11th, 2024. Just a reminder, we've got an observer coaching program available at a attractive price until the end of the year. And our new AI 2025 initiative is kicking off an annual research program. Those links on the report will get you there, or send me an email and I'll walk you through it. The Palantir and PTIR trade is still working. It's getting added to the queues on Friday. Would not surprise me to see that really explode on Friday. So we've got a really good cost basis and an excellent position, and we'll continue to manage that one. I made some adjustments to the index on the report page. We've added a holding X day period. I'll discuss that this weekend. It's a statistical summary of recent performance in the context of the last 10 years. Here's today's sniper trade of the day. It was in Tesla. It was a big gap up. There's the OR10. It sold off, so I got short like I always do. Took a half an hour loss when it reversed. That was a stop and reverse, and that turned out to be a monster trade as it pushed to all-time highs on net 5% gain. So you don't got to be right. You just can't stay wrong too long. That's key. In market health check, the long term, we're still near all-time highs, looking good. The 30-day performance still in good shape. Looking at bullish, quiet conditions, long-term overbought, all is well. This is that holding X number of days report. Briefly, what it says is if you look at today's scores, it was up 0.77% today. That's a Z-score of 0.64 in terms of average performance. It's net flat over the last 5 days. It's up 1.1% over the last 10 days, 1.8 over the last 20, and up 4.8% over the last 40 days. Now, in context, that Z-score of the last 40 days is only a 0.4, meaning that the average 40-day holding period in the S&P over the last 10 years is 2.2%. So today's score of 4.8%, given a standard deviation of 5.9%, puts it in above average, but only at less than half a standard deviation above. So it's not an unusual performance. And all the Z-scores show that this is actually a market that is not overheated by these measures of short-term performance, given performance over the many cases over the last 10 years. So this is a market that is marching along. Now, that same kind of treatment that comes out of this larger table, where you can see I've done the performance numbers on quite a variety of broad asset classes, and you can see how that shapes out for classes you're interested in. In the Dow 30, one strong move in Tesla, some give backs on a few other asset classes, plenty on the auto framer are shaping up nicely, as is also the case in the ETFs. Big moves in the NASDAQ, and discretionary, that's really tied to Tesla's outperformance. But again, quite a few auto framers looking good. You can see the auto framer here. It's a buyer's market. And the daily squeezes are showing some excellent opportunities as well, and some big names like energy, mid caps, Intel, Disney, Caterpillar. Here's the TC2000 treatment of our auto framer. Lots of targets to shoot at, to choose from. Four Seasons looking mostly in the fall with a little bit of summer. Tesla was the lone standout in the large caps, but quite a bit of weakness starting to creep in, a bit of a concern. The internationals are looking a little better. Brazil has had an exceptional day along with Latin America. Um, the frog list, the trading value, marijuana and Intel, Palantir and Tesla, clean energy are our top five. And all systems go in the Z scores of the different moving regression lines. So all is well, and continuing to March. We'll be ready for them tomorrow. Looking for significant trading actions Thursday and Friday to round out the week. We'll get this published and posted, and encourage you to consider the coaching program. We're knocking it out of the park. That's where the real work is getting done. Take good care, and we'll see you in the chat room.